Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's briefly take a look at the euro currency again. So not a lot of new information we have right now since yesterday. The one thing that probably might be interesting is that recent reaction on the PPI numbers. So you can see that market has formed bearish reversal candle, so it has created a new top compared to the previous session, but close below the lows of the previous session. This is bearish short-term candle that as a rule leads to the downside continuation. Not necessarily it will be straightforward collapse, or it might be just minor, some intraday extension, but in general it has the bearish feature. Well, as the central bank meeting looms, so we actually discussed yesterday all our view on euro currency, what you should do, as we suggest, if you have the conservative approach to the trading or active approach, and so on. So from that standpoint, nothing has changed significantly. For conservative traders, we suggest that you need to wait for clarity, getting numbers and a statement from the Fed, because potentially it might be, as we said, a reverse head and shoulders pattern here on the daily chart, and that will be much easier to deal with than currently trying to catch the direction. It's common probable volatility today and tomorrow. And with this performance, the pairing of the butterfly still stands on the table. So this is theoretically possible, especially if we hear something more hawkish today from the Fed. For those of you who trade on intraday charts and already have the long position, what we could do today? Today we could adjust once again the bottom of the right arm, because as you can see, despite that recent sell-off, here the butterfly is not cancelled yet. So market has to drop below these lows to cancel the pattern. That's why if you have the position, keep on taking some around this area, I don't know, you're on validation point right here. So only the break, the C point down, will erase the short-term bullish context, will cancel the possible butterfly pattern here, and leads to the further downside continuation. So that's why, yes, market has drifted slightly lower, but overall pattern stands valid. In general, we can't call this type of action as something direct. So it's a lot of choppiness here. So you can see market shows mostly volatility rather than direction. So it shows some downside action, but it's not really fast. Well, and from that standpoint, even you can see the MACD shows the downside slope to the downside, some kind of the, I don't know, maybe not the dynamic pressure, but at least you can see that some struggle stands here between the buyers and sellers in this area. But with these few signs, as I said, it still has some more bearish features. So once again, it's reversal on the daily. And here, let's take a look. We have perfect evening star candle pattern, which suggests that indeed it might be some downside continuation here. But this is what stands currently on the technical side. As you understand, the major driver will be the statement. And it could change the situation drastically, ignoring any technical background that we have. This is just the science why that explains our position currently for those who not sure of the dealing with currently with the market. So that's the reason why we have some doubts on taking a long position, because we have some bearish signs here. On the hourly chart, correspondingly, if we accord with the suggestion and this morning star reversal candle and so on, currently you have the minor guarded steeple to sell pattern. Wedge breakout has failed recently, so as you can see, market has shown nice action to the upside, but it was cancelled by PPI numbers and it's collapsed right back down inside of the wedge. So this could be called as a bullish trap, and usually in most cases this should lead to the downside breakout in normal conditions if market would be driving purely by the technical factors. So that's actually a few moments that we have currently on the euro currency. If you would like to deal with the Fed volatility and you would like to move through this, you could consider taking either long position with a butterfly if you have the bullish view, or maybe some bearish position based on the daily butterfly and based on the current situation, maybe with a stop somewhere above this area. All this stuff is possible, but you should understand the risk that will come later in today's session. For others, as I said, sit on your hands, wait for the clarity, wait the results of the Fed, and I think that we should get good stops for trading after that as well.